Okay, good afternoon guys, hope everything's going well. Let me know if you guys can hear me by giving me a thumbs up, leave a comment, let me know if you can hear me all right. We'll go ahead and get started here just in a few minutes, let a couple people join in. And I decided to do a live stream because I've been gone for a couple days, haven't put out a video. There's lots of there's lots of things on the charts I want to point out, and then if anybody else has any charts they want me to look at, we can go ahead and spend some time doing that as well. Let me know if you guys can hear me. And we're going to just go ahead and get started here. Just in a few minutes, I want to just give people an opportunity to come in before we start covering some of the key content. Yeah, we can look at the semiconductors, SOXX, SMH, we can look at those. Cool. There is a little bit of a lag. It seems to be about 20 to 30 seconds. So just understand if if you're asking me a question, there's going to be a little bit of a delay by the time I get to it. So we'll just hang tough for a few more minutes and then get started. Thanks for joining, everyone. Drop me a thumbs up. It does help the channel. This channel's, for me, it's just kind of a side hobby. It doesn't really, it's not like it really is a main income or anything like that. It's pretty much a side hobby, but it does allow me to kind of talk through the charts, talk about markets and stocks, and with people that are actually interested in this topic, and then I don't have to annoy a bunch of people that aren't interested in the topic in my personal life. Okay. Let's go ahead and get started. So, a couple things I want to point out right off the bat, and it's just, it's just a takeaway. I think it's important. We just closed the week, and this is the SPY. So I'm on a weekly chart here, and we just got we had a bearish engulfing. Let me clean this chart up a little bit. We had a bearish engulfing candle last week, and I talked about that right here. So there's your bearish engulfing candlestick. Now, a bearish engulfing is not just, that's not just the end-all, be-all. Doesn't mean you're going to reverse, but that is a reversal candlestick. So you see those bearish engulfings at the end of extended uptrends. And I would say that we've definitely had a pretty long extended uptrend. And so we got a bearish engulfing on the weekly chart. Now, usually what you want to look for when you get a bearish engulfing, to confirm it as a reversal candle, you want to see follow through really the next week, or the next candle basically. You want to see follow through, and that's what we just got right here. More selling this week. Now this week started off up, and at one point in the week it was up. I heard it's funny because someone commented to me on Monday when the market was up that my sell signal and my call that the market's going to go down is wrong, and is that I was wrong. And the comment that I told that person is, I said, look, one thing, is we've got divergences. Those indicate that the setup is there for more downside. We have a bearish engulfing candle on the weekly from last week, and the week's not over till Friday. That's what I told him. I said, we don't know where the week's going to close on Friday, because Monday was higher doesn't mean that we're not going to be lower on Friday. And sure enough, that's where we close the week. You know, we close the week with a lower candle on Friday. So it wasn't wrong. It was right. But, you know, oftentimes that's in hindsight that people realize that. I didn't hear from that person today. Let's just put it that way. And so, yeah, that's what we got. We've got, you know, lower prices. So on the daily, you know, we closed pretty much at a support level right here, about 453, you know, 453.98, closed at 453.42. And you can see that was your former high right back here. We did undercut it on the daily a couple days, but today they stepped in at the end of the day and bid it up right to that support level. So they're going to keep everyone guessing. I lightened up on my short trade on my triple Qs because, you know, so far it's been a profitable trade. We're closing right at support. I don't, you know, I think we could get a bounce here. So here's Qs, and you can see here, there's my level. If I can clean this up, there's my level right there at 382.98, and you can see that's your former high. I'm on the weekly chart here. Let's flip over to the daily. There it is right there. See that level? And we undercut it today, but towards the end of the day, buyer, you know, the algos or whatever stepped in, bid it right up, and it closed pretty much on that level. So that's support, you know, and to me it looks like we're going to bounce here. It looks like, you know, this is where we're going to get a little bit of a bounce. I still think we're probably going lower. We don't have to be going lower. This might be all that there was for the sell signal. Pretty good move so far. It's, you know, at the lows it was about 5%. That's pretty consistent with the moves that we've seen this year when we've gotten sell signals. You know, there was a 7% from the highs. And from the highs, if you look at the absolute high, the markets fell about 7 3/10. So about the same as this drop here. And yeah, it's on par with the kind of corrections we've seen this year. So it could be over. I don't know. And it makes sense to lighten up. I don't want to short right at support. You know, I want to short into resistance. If there's going to be more downside, I want to short this thing back at resistance. So I'll be looking for probably a bounce next week. Maybe we bounce up to this 394 area. Or there's a, you know, you could probably mark this one out here also on the hourly. I don't really like that. It's really more like right there. You probably have to go to the daily to really get it. Yeah. You know, some sort of a bounce maybe up to that 391, 390 area, somewhere right in there. Could be that's probably the most objective area to reshort for a move or a play down to this trend line here that I've got scribbled out. Okay, on the Qs, just to point this out again, and the reason why I think we're actually going to go lower, big bearish engulfing here. I've got it circled right there. But see that big bearish engulfing candle on the weekly? We engulfed, this candle here engulfed the previous entire candle right there. That's a bearish engulfing. That's a potential reversal candle, and you want to see confirmation with follow-through of the next candle, and there it is, follow-through, more selling. Doesn't mean, but, you know, I think we're going to bounce here. It's likely we're going to bounce and bounce into resistance, and then up there is where you're going to want to short at. So we'll watch that for next week. See if we can put on another short up into resistance. If you're just long-term trading or trend trading, you probably, you know, you could just ride it out and maybe try to, you know, get another move down here, down into this area. So that's what I'm watching for. But the point is, we just saw, this is a topping pattern. Bearish engulfing with confirming candle. These two candles on the weekly chart tell me that we're likely going to get a bigger reversal, and it's not just going to be, you know, and it's not over. Next level, we really want to see this level break. I've got it marked in blue here. We really want to see that break. So I wouldn't be longer term bearish or like expecting like a full top in the market until I see this go. I think the potential's there. I would put a higher probability that we've just put in a long-term top, but we got to see this level here go, this trend line. So I don't know when or where that's going to break. But if it does break, then, you know, that's likely signaling a longer term top. So things to watch for on that. Okay, so another thing that was kind of interesting, I just kind of summarize what we have going on. So gold, you know, gold basically still holding this support line you see here on the weekly. And this is longer term stuff. But again, if you're trading something, you want to know what the bigger picture, the bigger picture trend is for that. So gold, on the weekly chart, you've got this trend line right here. And you can see every time we've hit that, we've held it. You know, hit it there, held, and even this week we've held. So longer term, there's no technical breakdowns or major sell signals in gold. And you know, I also don't see divergence on this weekly. You know, we've got downtrending momentum, downtrending price. All right. So, and that's on the weekly chart. The daily chart, we had bullish divergence back here. I circled it. So I think we're gonna break higher. I think there's another leg higher coming in gold. Probably taking us over the all-time highs into new all-time highs is what I'm expecting. Perhaps a move up to 2,500, 2,600 in gold. All right, that's all I have right now. I don't have any breakdowns there. You know, yeah, looks like we're going to go higher. Okay, what else do you guys want to see now? Those are kind of the two things I really wanted to point out. We'll start digging into the subscriber picks. Docusign, that one's kind of fun because they got destroyed today. I saw that. Wish I was short on that, but down 42% in one day. That's a massive move. Let me get back over to the daily chart here. Again, the weekly chart's just for a bigger picture. I don't trade off of the weekly. I don't enter and exit positions based on the weekly, but that gives me the bigger picture trend, and then we hone it down. Okay, so Docusign. Here's, again, this is why when negative divergence shows up, I'm not interested in just going against that. So on Docusign, you can see right here, see that? See how the momentum was basically just dropping off? It extended right there, but basically just dropping off on the RSI and the PPO. Really right through there, it really started to drop off. And you see the price, how it continued to lift higher. Divergent high, this little pop, right, candle was a divergent high. There's another one. Okay, that's why I'm not really interested in just getting long or stay, you know, if you're long, you could stay long if you have negative divergence because it's not a sell signal, but it is an indication that the conditions are there. And sure enough, those last few divergent highs were the top of this thing. And then it drifted lower, and basically we you know, here's your former high, broke back below into the range. So that tells you that there's a high probability when you have a false breakout, which is what this was, you know, breaking to new highs and then failing and coming back into the range, false breakout. If it was bullish, what you would expect to see is it to hold this level and then continue higher and take out these divergences. You didn't see that. It broke back into the range. So that was your first tell. And if I was long this thing, I would stop out right there on a, you know, basically that candle right there would have been my stop, breaking back into the range. And then it just kind of drifted sideways. But the point is, all these people who had been long and buying this thing, all the way going back for, you know, July of 2020, so more than a year and a half or so, they'd all been buying. Everything was fine. They were buying at support. So this is where the dip buyers were interested in buying this thing, okay? And so as it was breaking down, you had these dip buyers that were waiting to buy right back in here. And these are people that have been buying all along, thinking, okay, we're going to flag out, we'll buy at support, and then we'll off to new highs, and we're good. Well, they didn't even get a chance to exit their position. They were trapped. So you got a year and a half worth of longs completely underwater and trapped with a big gap down. And that's why negative divergences are important to take notice of, because oftentimes when things sell off, they don't give you just a clean exit. Everybody, you know, a lot of the bulls are always like, top's not in, and what I would always argue is you're not going to know when the top's in, or if you do know, it'll be too late. You'll know that the top is in hindsight, and it'll be the fact that you got trapped. And so you don't want to be selling, panic selling after being trapped. You want to sell into resistance. You want to, you know, sell in, you know, when you start having negative divergences, that gives you a clue that, okay, maybe it's time to start lightening up, things like that. All right, so that you're able to buy down here. Now this thing is in a thin zone. So here's the thin zone. This is the 2020 basically Momo, you know, Momo trade, YOLO trade, whatever you want to call it. And this is basically just a straight up shot. And then here's this is where all the traders, and if I pulled up a volume histogram, you'd see that most of the traders were buying all through here, and you know, few through here. So this is your thin zone, or we've entered into the thin zone. We should go right to the bottom of the thin zone. So that would be my level or my target. It doesn't mean it's going to happen in a straight shot. You know, we might get some bounces along the way, but I would look at bounces on this thing as an opportunity to short it. So what I would expect at some point in time, probably before we hit the bottom of this thin zone, is a bounce back into this gap fill right here at 185.85. Lots of sellers right up there, because what's happened is all these people here are trapped. They're just thinking they just want to break even. They'd be happy to break even. And so they're sellers in waiting. That's what they are. If this rallies into gap and it starts to get up to here, this is where a lot of traders have taken positions down at support, at the support level. So as you rally in there and they start to get their money back and they start to break even, they exit. All right, they are just wanting to get their money back and wanting to be sellers. So if you rally up there and gap fill, that's a great spot to short. It's objective. And I'd probably look for a little bit of a stop raid where it runs up and pops it and then fails. But ultimately, anywhere in that area, I'd be a seller, because that's where all the trap longs are going to be sellers as well. So you've got lots of traders wanting to sell at that level. All right. So if you get that, that's a gift, I think, if you're trying to short. Maybe again, what I would do, I wouldn't wait for the last penny. I don't think the market's going to let these traders get out so easily. I think really what's going to happen, it's going to rally. Again, this is just what I'm assuming. I think we'll bounce and we'll start to rally up almost to close the gap, and we'll fall short, and we actually won't fill the gap. I think we're going to fall short, 175, somewhere right in there. I think the sellers will step in, we'll fall short, and it won't give these people a clean exit on break even. And as it starts to roll over, they'll start to panic sell because they'll see it rolling over, and that panic selling is going to be your next wave, or that's going to create your next wave down all the way down here, and that's your support level. Now that should be good support. I believe that will be, and what we'll look for down here, if this is going to be a buy, would be some bullish divergence. It'll start to show up, most likely. We'll kind of chop around, probably do some stop raid and all that, and then we'll start to recover, and we'll have bullish divergence, and we'll put in a nice strong base, and that's your go long. Okay, that's in detail, but again, I just wanted to really go through what I'm seeing there. All right, what else do we got? What else do we have? Wondering how to approach potential bottoms in NEO, Tesla. Tesla's not a bottom. Tesla's just getting started, all right, to the downside. Here, again, I could be wrong. This is just my interpretation, but let me kind of clean this chart up. Trend line here, you've got support. I've got it kind of circled. There was another tag right there. Okay, and then so that should be resistance. See the breakdown candle right there, nice impulsive breakdown. So it just validates that trend line. That's all it's really doing, helping validate it. And then we rallied above, recovered that trend line, boom, big impulsive breakdown. Tried it again, failed. Failed right here, and again, failed right there. So sellers are there smashing this thing down. So we got a gap down here. That's probably a short-term bottom down here at 911.88. Okay, you got a gap down there, and that's kind of your former high as well, pretty much right in there. So that's probably where that's where the bottom might be at. I see no bullish divergence really. This is just getting started from my perspective to the downside. So we'll see where that goes, but that's all I have on that one. NEO. Well, let's look at NEO. All right, so these are former levels that I've had of support. There's a breakdown, the sell signal of that level. Pretty well-defined level. I mean, you could move it down slightly. Maybe it's here. Maybe I'm just off slightly. But I still have 1, 2, 3 reactions. This undercut it. There's another reaction there. I think that's pretty valid. So there's a breakdown. NEO, I think, is heading down here. Down to, and I've got it circled. This is where I think NEO's going. 22.25. All right. You got a gap to fill right there. So I think that there will be a bounce at that level. We could look for, bullish divergence and stuff down there if it goes down there, but that's what I would think. There's also another gap all the way down here at 956 and 787. So big gaps down there that could get filled, but I think we'll get a bounce at 22, about 22.20. Look for bullish divergence. PLTR. This one's pretty new, relatively new, but this is what I've got for the uptrend. Could maybe tighten it up, but it's basically right there. Uptrend, all right. This thing just started off with negative divergence back here. See that? See that new high, divergent high? High probability of failing. Did fail. Obviously, you wait for a trend line break. I talk about those concepts in my course. But from the high down to the first tag of support, 62% drop, bounce off the trend line, and then just chug along the trend line. You can see just grinding. No longer impulsively bouncing like it was before. You hit it, impulsively bounce, hit it again, and then just grind along it. That's a sign. That's behavior. You want to look for that kind of stuff. And broke right there. There's your breakdown, sell signal. We haven't had a full back test. The seller stepped in early. Possible reaction here because this was a reaction low right there. Probably look at that. A little more downside. That's from where we're at. That's another 9%. Down there, and starting to build bullish divergence on the hourly. Again, it's just the hourly though. That can be just negated pretty quickly. Usually if it's on the daily, it's a lot more solid and you can trust it more. Hourly is usually good for just smaller moves. So yeah, you might get a small bounce here. Might bounce and then it's hard to say, but maybe you bounce and then roll over. I still think we're probably going a little lower, longer term. Okay, that's that one. Not a lot of history on that one. Pinterest, CrowdStrike, Space, and Dropbox. Well, let's go through a couple of these guys. Pinterest. Okay, so this thing's murdered out. Big gap down here. I've had that circled for a while. Probably going to go fill that gap. All right, that's where I think that's heading. It's halfway there now. Nobody would think you're ever going to come fill the gap up here, but pretty obvious that it looks like it's going to fill the gap. Not an area I'd want to take a trade on. The trade's already playing out. So if anything, I'd probably be looking for a long down at gap fill down here. It's about 25.40, 25.50. You get down in that area, that's probably a better spot to start looking for a long. And yeah, that's what I would be anticipating. Again, here was your uptrend line there. I have it marked out. We broke trend, backtest once, backtest twice, chopped around for a long time. Again, this is a pretty resilient market because you've got, you've got decade long of dip buying basically and Fed pumping. So things aren't going to just roll right over. They're going to just, if you're going to get a bear market, it's going to start slow and more people will start to realize it. And as more and more people realize it, more and more sellers show up. And then finally you get the people who just can't take the pain anymore and they panic sell and you get the big flush out. That's how bear markets work. They kind of grind lower and then flush out, and then you get a bear market rally. Then they grind lower, flush out, bear market rally, right? So that's how those work. And then usually at the very end, it's just a big, massive drawdown, and that marks the end of the bear market. Bigger picture stuff. You can't say we're in a bear market yet. In the video I put out, I just was talking about potential top. Doesn't mean it has to be the top, but, and again, I've called I put out several videos saying I think this is the top. Obviously, I've been wrong. It's very hard to call the top, but I try to make a case for it every time. And I don't just sit short in something. You don't want to, if you're wrong, you take small losses, move on. All right, what else do we want to cover? What else do you guys have? ATVI, is that Activision? I heard that one was struggling. Let me look. I know they had some sort of legal stuff or, yeah. Activision Blizzard. Well, let's look. Okay, so longer term, we're just looking at a daily chart here. It's about like that, I guess. This is consistent with the, the market broke trend in 2018. Let me go back to, see this Activision, see how it's 2018 right in here, and we broke that kind of trend right there. Well, the SPY did that too because the Fed started hiking interest rates, and it broke right here. There's 2018. So again, the Fed cannot hike interest rates. I think what's kind of going on, the Fed cannot hike interest rates without taking the market down. The market is, that's why I think the market is a bubble, because it's pumped by Fed policy, and that doesn't mean that it's not going to continue, but the Fed right now is what's happening, or at least what I think is happening. The inflation's starting to run away from them, so they got to get it under control. So they have to try to spook the market. They're trying to get the market to sell off. So recognize that the Fed is trying to take some of the heat, especially in the oil sector, out of the market so that they can soften up the inflation reading and not actually have to tighten. The Fed cannot hike interest rates. They and if they do, it's going to be like a 25%. They're going to just inch into it very, very slowly. They can't do anything substantial. So rather than try to actually hike interest rates, they're going to try to spook the market and talk it into selling off, so that then they can kind of ease off on their interest rate hike, talk, and again, that's what I think is going on. So look for the market to react and sell down. That's what's going on right now. So back to ATVI on the daily. So then you set up this secondary trend line here. It's something like this. Let's tighten it up right there. All right, so look, you've got one reaction, two. This one's not quite there, but three. They stepped in and bought. Four, and big sell signal. It came on earnings, but the sell signal was a break of trend, and the break came with a gap down. So you gap, you back test, you fail. Everything's bearish here. Bigger picture. Where do we go to? Well, there's a gap right here. Looks like we're running to fill that. Looks like we're kind of filling that gap, but that gap's already been filled. So I think it's at support. I think it's at least a short-term support level. You can see support there. and we're right there. Looks like it's at a short-term support level, so you're probably going to bounce here. Let's check the hourly chart. Bullish divergence on the hourly. See that right there? Again, divergences, I know a lot of people say they don't matter, but they just set up the conditions. So the conditions are right for a short-term bounce, and we're at support with bullish divergence. This is an area that I'd probably want to be a buyer. All right, I'd want to go long here with a stop slightly below. All right, where would I trade it to? Because again, I don't think, you know, could be a full back test. You know, you could run all the way up to 77, 73. Any kind of move up in there would be where I'd look to exit, or potentially at this gap here, kind of this area, which is going to be about 66.30, maybe a move up to there. Okay, but I like it. I actually do like this long for a short-term bounce. Again, stop somewhere below. All right, that's all I got on that one. Yeah, I looked at Docusign already, so you can go back and check out the video. Oxy, what is that one? Is that oil? Yeah, that's oil. So this is going to be part of the, you know, the Fed, the administration. They're trying to get oil prices down because oil, you know, is a big, it's a big cost, right? So it's a big cost for many businesses, and that you know, as oil increases, they have to raise prices to pay for that increased cost, and that's you know, consumer price inflation. I mean, inflation's when they expand the monetary supply, but nobody cares about that. They only start caring when the prices start going up, and so they're trying to get prices down, basically. This one, yeah. I don't have a clean read on this one, really, to be honest. You could maybe a little bit of a wedge right here. Yeah, you know, I don't have a clean read on it. I can't give my opinion on it. Sorry. Have to move on. Moving on from that one. All right, let's see what else. I'm just going down the list, looking at what you guys are asking for, or if you guys have any, you know, any questions on my interpretation of what's going on in the market. I did kind of go through that, but the charts were, you know, again, that's just what's going on fundamentally. But the charts were set up again. The sell signal in like Qs. That came on the Monday. We didn't hear anything about this new strain of virus. We didn't hear anything about anything. The Fed hadn't talked. Your sell signal came out right there. And that's just because the market sells down because traders are selling, you know, institutions are selling it down. And then they slap on a headline retroactively. Oh, there's a new virus. That's why. If it wasn't a virus, it'd be something else. So, you know, the technicals and the charts usually show us what's going to happen in the future, and then the headline will show up. Like, I think gold's going higher, and I don't know why it's going to go higher. The chart tells me it's likely going to go higher. It's not guaranteed, but the probability seems to be there. And, you know, if it goes higher, then we're going to hear something about that. You know, I don't know what the headline will be, but they'll slap something on there about that. All right. Just looking for interesting ones. Yeah, GLD almost put in another death cross. Well, I don't trade the death cross and the golden cross. See, I don't even have my moving. I don't even have my moving averages, all of them up. I don't use those as you know, they are oftentimes like the golden cross and the death cross will come after a trend line sell signal. So the divergence trend line sell signal method that I use usually is a little faster, and then the cross, whatever that cross might be, just helps confirm, I guess. But it's not, you know, I don't usually just enter a position on a death cross or a golden cross. if anybody's, you know, golden cross, you know, it's just when the 50 day is moving through the 200 day, you know, that's what it is. Moving up, you've got the golden cross. Moving down, you got the death cross. All right. What else do you guys got? Yeah, you know, I mean, I think, again, with gold, I mean, I think gold, you know, they're trying to smash this inflation trade. It's a real problem. So they're trying to do it just through talk, though. You know, the market sold down this week because Jerome Powell said that they might have to accelerate the taper. Okay, yeah, maybe they will accelerate the taper, but they're not going to be able to hike interest rates. You know, they might be able to put some, you know, bring the inflation trade down a little, and then it's going to pick right back up again. And they're just not going to really be able to push it down for real because they can't hike interest rates. I just don't see any way they can do it without getting some of the debt down. You know, the debt load on corporations and on the government is just too large to raise interest rates too far. So it's just the construct of what's going on. All right, Facebook. Well, I mean, the things are starting to sell off. So Amazon, let's look at these real quick. Amazon, bigger picture, big sideways range. Let me just kind of move this over here. Oh, not like that. Like, see that big sideways range? Okay, breakout 1, breakout 2, which is interesting that we got 2 breakouts of that range. Both failed though, and you know, we're almost in the middle of the range, but I think we're heading all the way down here, 2955. Now, it doesn't mean it's, you know, this is where the buyers probably are, you know, look, you can see they're stepping in here. This is where they've stepped in every single time on this moving average, but I think maybe you bounce. I think we're going to fail, continue lower. So again, just watch those key levels on the SPY and the triple Qs that I pointed out, and that'll give us a tell. Google broke. This is coming back from, here's Google, March 2020 lows. You can see support, 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 and starting to get a little choppy through here, and you know, breaking. Pretty obvious break now. So I think it's going to pick up speed and become a little more impulsive. Apple's just right there. You know, we broke out above the former high, chopping around, closing basically right at that trend line. So undecided on that one for Apple. We do have negative divergence. I've got that kind of marked out. We just extended out. It's confirmed on the RSI. See how the RSI is turning down? So confirmed negative divergence. Not quite confirmed on the PPO, but confirmed on one, likely going to be confirmed on the other next week. And that's going to set up conditions for this to fail. We also have this is a bearish rising wedge pattern. So, you know, maybe we break, head down to the bottom of the wedge, bounce, then break, and head all the way down to, you know, more major trend lines. You can see there. Here's kind of this is your bull trend from pretty much the 2009 lows in Apple, and here's the Fed pumping it way up here. So if it's gonna break, you know, we could break and head down to here, probably get a big bear market rally at that level, go all the way down to this area. And again, this is just bigger picture stuff. We can't just bank on this or trade on it, but maybe that's the bottom of the bear market if we're going to go into a bear market. Pretty good size move for Apple, though. That would be a drop of about, what, 60%? Yeah. So that could happen in a bear market for Apple, 60% drop. Sure, why not? Especially given how much this thing's been pumped up. And that's probably likely that would probably be the lows. Yeah, you know, I was going to do the live stream tomorrow. I decided to do it this afternoon. I was just kind of chomping at the bit to cover some of these charts. So I'm not going to do one tomorrow, guys. I'll just get it out of the way today. SMH. All right, let's look at this one. I know you've been asking for that one. All right, I haven't looked at this chart for a while, so well, something like that, I think, was your uptrend. And then it drifted sideways. Big impulsive rally here, obviously. Yeah, you can see I've been trying to chart it. I would say something like that. I like that. Support, support, support. So, you know, as long as that holds, it should be good. But we could come down, hit that. If that breaks, then I'd say a lot lower. On the, let's see here. Yeah, no negative divergence really there on the PPO. Little bit of negative divergence showed up at the very end, right here. So you'll see, so I zoom in, see that one. There it is right there. And there, and then you've got, you know, higher prices. So there is negative divergence there. So on the daily, that might set us up for a move. Pretty thin zone right in here too. This was just a big FOMO rally. We could be set up to move down to this trend line. I would watch that. You know, I'm not interested in shorting this. But down here, if we get a break, that's where I'd look to short. Yeah, so that's what I'm watching. And then like another look at it, SOXX. This one had a bearish rising wedge. Got a little wobbly on us though. Broke, recovered, chopping around. Not my favorite, to be honest. Kind of took out the negative divergence. Not quite, but it is pretty close. So I'd be watching this line right there, 495, this trend line right there. You can see resistance, resistance, resistance through here. Breakout. So you have a breakout. Look for this to come in. The buyers will be there. They're dip buyers. You probably get a little bounce. And then if that breaks, then down she goes. You know, likely the top is in. If it holds, well, you know. What I would do, you know, if you want to be long, go long down here. Set a stop somewhere below. If it breaks, then, you know, you could flip short. All right. Let's see. Barrett Gold. Yeah, I'm still long Barrett Gold, so it's come in on us a little bit, but I still don't see any real reason to get rid of it. Been kind of marking trend lines, trying to find, you know, this wasn't a real trend line because I've only got 1 and 2 reactions. You need more than 2 to validate a trend line, so I have to get rid of that. But I had it up there as a potential. You know, I think this is somewhere maybe right here. Yeah, it's right about there, I think. We're just below it, you know, so if we get a snapback recovery, then this was just a stop raid. If not, then you could look at, again, here's the lows. You could look at this trend line all the way down here, 1730 or so, 1750, depends on when you get there. Could be the bottom of this this down leg. Excuse me. Need to drink some water real quick. Throat gets a little dry talking this much. Okay. Costco. I'll tell you, I like Costco as a company, but let's look at the chart. These are March. Oh, these are March 21. All right, so I've got some stuff. All right, so here's your longer term bull market on Costco. This is going all the way back to 2010, but basically on the daily chart, pretty much longer term trend is down here. Now we've pretty much kind of gone parabolic, and it's been a while. So if we're gonna top out, then look for this thing to come all the way down to this, you know, this longer term trend line. Yeah, the trend line, what I would probably look for is here. Let's see what, yeah, like that one. Couple reactions there. We've got 3 distinct reactions. 1, 2, 3. So we can say that's our trend line to watch. All right, on the bigger picture. And then on the... Yeah, no real negative divergence on the, you know, a little bit up here at the top. And it's probably there on the hourly. You know, if you see, it's on the hourly. So obviously it was signaling short term that we were likely going to get a correction. We've started to see that already play out. You know, and you'd wait for a break of this trend line support here on the hourly. And your break, you know, you broke, it wasn't that impulsive, and then there, you know, started to break. That's an obvious sell signal right there. There's an impulsive break, but yeah, I don't see any bullish divergence on the hourly. Look at this. Just to point this out. See how the momentum's starting to trend up right here on the PPO and the RSI? But so is price. Price is moving up too. Looks like a bear flag. All right, so this is the flag. Momentum moving slightly higher, price moving slightly higher. There's no divergence. All right, they're moving together. They're converging or whatever. They're moving together. So this probably is a bear flag to me, meaning you've got the flagpole here, and then you're going to flag out. So mark this flag like that, and you know, maybe something like that. You break the flag, you continue your projected target down to here. That sets us up for a move all the way down to that trend line, which is down here. So yeah, that's where I think this is going, down to a tag of this, you know, 47-ish, which would be another, what, 8% or so to the downside. And then you'll probably get a longer term bounce right there. There's definitely going to be buyers down there on this one, so that's where I think it's going. Probably flag out a little bit more. Maybe you flag out on Monday some more and then break. All right. Again, just my opinion, just my read, doesn't mean it's going to be true, so, you know, hold true. So evaluate it and, you know, just read the price action as it's taking place. AMD, huh? That broke? All right, let's look. Yeah, you know, actually I saw that earlier this week. Let me look at this. No. For me, it's not. I'm looking at this one. All right, maybe it broke a smaller time frame trend line on the hourly or something, but this is 2016, and this is my big. You know, this is your big trade. Support, support, support. I mean, if you're trying to call a top in the market, you know, you got to look at the bigger picture stuff. Broke, hit resistance once, resistance, kind of recovered, failed, resistance again, recovered. It's getting choppy, you know, it's getting volatile, but still above there. So until I see some sort of a big impulsive sell signal breakdown, still above trend, and I wouldn't be shorting it until I see that. VIX is rallying. It's probably going to pull back, you know. Yeah, look at that. There's VXX. Hit my target. I didn't actually have any of this, but I was short. Didn't quite hit it. Stopped short, but, you know, 31.16 was kind of the short-term target. And Spike did do it today. So nice move. I think we're probably due for a little bit of a pullback, but we'll see. All right, what else do you guys got? I'm going to go for a few more minutes and then wrap up. Wealth effect, yeah. Apps, yeah, I've got that one. That's, what, Digital Turbine? Yeah. Yeah, this thing's going lower. So here's your uptrend in apps, right? This is everybody's partying, you know, uber bullish, raging, foaming at the mouth. Okay, then you get the period of, like, the people don't realize it, but it's just, you know, consolidating, chopping around. All right. To me, though, looks like we're just going to go lower. I would look down here. Next level of support right here at 40.58. Another thing you might want to watch for on these these momentum stocks, these high-flying ones, these are the mania stocks. These are the stocks that everybody's still piled into because they made a lot of money back in 2020 and they just think they're never going to end. And a lot of a lot of people, they don't sell, at least retail, they don't sell until they're taking on losses, basically. So, or until they're giving back quite a bit of profit, depending on where they buy. But they're not going to sell up into resistance. They're going to sell as things are crashing down. Just like they don't buy when things are crashing down. They like to buy when things are ripping to the upside. Most retail traders are just momentum traders. They just, find something that's going up and buy it. Sell something that's going down. But yeah, that's the level I'd watch for right there at about 40.26, 40.30, somewhere right in there. I'm not adding to any gold mining positions, T properties. I was looking at that. I didn't add today. I just didn't see enough signs. I kind of have all these gold miners that I just kind of keep an eye on. Newmont looked good. I was hoping to get a bullish engulfing candle. We did not get that, really. It looked good, though. I mean, it was strong. Bullish another divergent low yesterday, So in general, we still have that bullish divergence, which tells me that this is just building energy for a major move to the upside, which I think is going to take us above the all-time highs. That's what I think this next leg is going to do, is we're going to grind higher above all-time highs and probably get an explosive rip to the upside, some sort of parabolic move, and then we'll look to probably exit those positions on signs of that. That's what I think is going to happen. But I didn't see enough evidence on these miners. BTG, maybe could buy that. I don't know. You're at support, basically. COVID was a liquidity event, so you just kind of exit that one out. Not good, yeah, it just not firm enough. Just kind of scanning through some of these just to see if anything really stands out as, possible false breakout. We only had 2 reactions, really, 1, 2. There's kind of a third right there. So, and there was a breakout, but so that's failed. So, that's not. It's kind of mixed signals a little bit on these miners. But in general, I still think they look pretty good. The divergences haven't been taken out. They're still there. So I think we're likely going to build on those. All right, that's what I have on that. Again, the Fed they can try to bring the markets down, but if it gets carried away and the markets start to sell off pretty bad, I suspect the Fed's going to step in and lighten up on their taper talk. Send some guys out to talk about how they need to wait and see. They're trying to soft land this thing, meaning they want the markets to come down, but they don't want them to crash. They want them to nice and softly come down to a modified level and then hold there and not go down anymore. Can they control the market that well? Well, we'll find out. Lyft, huh? Well, Lyft has been selling off. That one's been really weak, I've noticed. But, well, you've got a gap here, so I would definitely look for gap fill. That's, I've had that marked out. Trend line, broke trend. There's your sell signal. Again, negative divergence. See it right there? So you had negative divergence all through here. That was conditions that you're going to break down. Sell signal. They ran it against you. Shook you out and now it's breaking down. So maybe we bounce here. I don't know, but I would say bounce. It's a sell the rip until you gap fill is what I would say. You know, if you're going to run up, and I would look to short that and then gap fill, and then probably cover that short down at gap fill. That would be probably my final target. It's already, you know, a decent way there. From the all-time highs, lift is down 42% already. So, again, the market I think has fooled a lot of people because the breadth of the market has narrowed quite considerably. So you've got like the FANG stocks that have been moving higher. Everybody's crowded into those couple FANG stocks because their market cap weighting so high, it's able to hold the indices up. Meanwhile, all these other stocks, a lot of these other stocks are down 40%. They're just, you know, there's just a lot of erosion in the base of the market, so that as soon as you see any weakness in the FANG stocks, there's nothing there to hold it up. You know, there's no other strength. So, and that's what we're saying. You know, on down days with the FANG stocks, the market's just imploding. So, you know, that's dangerous when you have really thin breadth like that. All right, what else do you guys got? Pot stocks? Yeah, I don't know about that. But they, you know, what are those pot stocks? What's that ETF? MJ, is that it? Yeah. Yeah, these things have just been destroyed. Here's the all-time high, down what, 67%? So are they bottoming? Well, possibly, you know. Does look like there is some bullish divergence that's starting to form. No buy signals though. So on the hourly chart, I would just look for a break, you know, above this trend line right here. Possible bullish falling wedge, maybe. No buy signals, all right? So, yeah, they could be set up for a rip, but look for a break of this on the hourly chart of the trend line, some sort of a buy signal. And if you get that, then, you know, probably trade it. You could probably trade it up to here. 13.48, I think, would make sense. Maybe more, but, you know, I think that would maybe be the initial move at least. It's a good size move too. I mean, if you look at it, this is logarithmic scaling, so that would be a move of 20%. It's not bad. No buy signal though, so again, I wouldn't enter until I saw that. Car didn't, you know, car's still hanging in there. One of them that I noticed, AMC, I was trading it today, starting to break. So AMC, you've got this thin zone basically from about 29.72 down to 20.40. So about a $9 thin zone right in here. And you can see all the trading that's taken place up in this range here. And look what's going on now. We undercut it today. They stepped in the last like 10 minutes and bid it up to kind of hold it in that area. But we enter that thin zone and start to close in there, and I think we're heading straight down to that level of $20. And that's a move of about 30% or so. So, yeah, I think that's in the cards. All right. So volley, cover the ones obviously I've been talking about in my videos. Still hanging in there. Here's what I think about volley. You know, on the daily, you've got 3 distinct reactions. 1, 2, 3. All right, we undercut that a little bit, but recovered, so that's bullish. And I think we can. I think we might tread along this trend line for a little bit. Maybe we're going to come down, hit it. Anything along this trend line, to me, would be a buy with a stop somewhere below. Give it a little room because there's always, you know, it might intraday they might try to run some stops, but anything down along there looks like a buy. And you see a breakdown of that, then that would, you know, you'd want to stop out on that. But otherwise looks good. And then if you look at the daily, bullish divergence, see right there, big bullish divergence. And that's your last divergent low right there. So maybe they're going to run down, make a new divergent low, and then recover. That's possible, but again, that trend line is the area where I'd want to buy, and I think we're going higher. All right. I don't see any technical change in that one. All right, what else? Well, I'll do one more and then probably wrap up, guys. Gone through a lot of stuff here. If you guys haven't given me a thumbs up, I'd appreciate that. If you could do that, it does help the channel. And what, XLV, XBI? Lumber, huh? I've got some, what I was looking at, this one, Weyerhaeuser Company. They do lumber. I don't see anything bearish quite yet in lumber. When I look at lumber futures, I noticed the other day they're spiking again. So that's the thing. You know, the Fed a while back was like, oh, we think inflation's going to be a lot like lumber. You know, it's going to spike and then sell off. And I always thought like, well, it'll sell off, but it's going to come back down to the former high, and that'll be the new low. And that's what it looks like. You know, you've got this former 457 area, and that's where it stopped. It's holding, and now we're trending back up. You know, higher lows, higher highs, clear uptrend in lumber. So I think that's what this is going to be in commodities. I think a lot of these are going to, you know, make big bullish moves higher, then correct over a period of months, maybe a year, then make the next big bullish leg higher, then correct. And that's what I think gold just did. You know, gold made a big bullish move higher. It had a year-long correction, and then I think it's going to resume the bullish trend. There's lumber, and then, you know, Weyerhaeuser. You know, you had some bullish. There's your bullish divergence right there. See the. All right, higher momentum's moving up. That was your last divergent low, and that has been, you know, if you bought there, although it's been kind of a grind, it's been consistently moving higher. So looks like it's uptrending. Yeah, I mean, maybe we're going to get a little bit of a correction. But no, I don't know. I don't have enough here to go off of where I'd say, oh, this is a screaming short. To me, this looks more like a long, although you could easily get corrections down to maybe like this trend line or something. Snow doesn't have enough history. That's that database one. And they don't have enough history, but I mean, look. You know, the IPO, everybody's foaming at the mouth bullish, you know, and then you got wrecked. Foaming at the mouth bullish. Man, big down days now coming in. Probably move this over to like that. And yeah, I'd say we're still holding support. You know, looks like they recovered it and held. Could be a buying opportunity in snow. If I had to go one way or the other, I'd probably buy. That's probably what I would do. We're at support. I'd probably want to buy right here. Basically today, like at the close, 345.11. That's probably where I'd want to buy. You know, this was a big bear trap. I mean, look at that big breakdown, and then you recovered it right there. So that's what I'd probably want to do is buy for another leg higher. All right, guys, I'm going to wrap up. Leave me a thumbs up. Check out the stock market technical analysis course in the description of any one of my videos. And I will catch you guys on Monday. Have a great weekend. Bye.